Good morning, everybody, and welcome to the Trade Talk podcast. Friends, today again we need to go through with global markets where all the markets are trading lower, including Singapore Nifty, which is down more than 300 points, and it is mainly because of the hawkish statement which came from the Fed meet. Now, if we go through with the overall outcome of the event, then it is not positive for emerging markets, especially for bond market, because now the bond market is indicating us that we are going to see further more gains for bond yield, and 10-year bond yield is around 1.85. It also going to strengthen dollar, and that's the reason dollar index is trading around 96.50, which was around 95.50, 95.75 some few days back. So these two major indicators are not in our favor. Along with that, if we go through with crude prices, then there also we saw substantial jump because of tension between Ukraine and Russia. Crude is quoting around 91.90 half dollars, which is certainly not positive. But yes, if we go through with the next event or the next event which we have to face, then in that case the market will now start focusing on the event of union budget, which is scheduled on 1st of this February month. So if we go through with Nifty, then on Tuesday we saw substantial recovery from the lower levels. 16,900, 16,800 acted as major support for the market, and from there all the way the market recovered back to the levels of 17,200 to 50. But today, on the back of weakness in the Singapore Nifty, we may see the opening somewhere close to 17,000 or 16,900 levels. On immediate basis, 16,800, 16,700 going to act as major support, because option statistics are suggesting us that 16,700 is going to act as major support for the market. But in case if we see the market is breaking the level of 16,700, then in that case gradual decline towards 16.5 or 16.4 is also not ruled out. On the higher side, as we mentioned, 17,200, 17,400 would be major resistance, and till the market is not sustaining above the psychological mark of 17,000, we are not going to see any major activity during the day. Also, Bank Nifty, which was very strong on Tuesday, may open somewhere close to 37,000, where it has support as per option statistics, and below that 36,500, 36,450. In case the Bank Nifty starts reversing from lower levels, then only we can expect further more strength for the overall market, because on Tuesday also when the market was down, Bank Nifty actually helped the market to move higher. Also, Nifty IT index fallen to its previous lowest levels of the November month, and the Nifty IT index has spent a lot of time in the past. This time also, after falling to these levels, we are expecting some rebound, because it's a vertical fall that we witnessed from the highs, and ahead of the event we may see some short covering in IT stocks. So we need to focus on large cap companies like Infosys, TCS, as well as Tech Mahindra, Wipro. And finally, we cannot forget auto index, because there also we saw substantial strength. Stocks like Bajaj Auto, Hero Motors, Maruti, they did extremely well in last few days, and on Tuesday also they were trading higher. So there we are expecting further more momentum, but based on the overall market reversal activity, we should take any specific call. Otherwise, we should stay away from taking any short-term call in the market. Again, if we go through with FI's figure, then on Tuesday, they sold heavily to the tune of 7,000 crores, but domestic institutions supported to the market heavily, and they bought more than 4,000 crores in the equities, which clearly indicates that now again domestic institutions are ready to support the market. And if we see any lower opening today, then we can expect some buying from domestic institution, and that will support the market, or that they may try to stabilize the market. Friends, that's all from my side and from our side for the day. With this, we are ending today's morning podcast. Thank you and have a great day to all of you.